Amazon was once just $3 a share, and today it's over $3,000. Nvidia traded under $5 a decade ago. Now it's up more than 50,000%. Even Tesla climbed from under $10 to over $200, making early investors millions. The truth is, history keeps proving that some of the biggest winners start small, quietly trading under $10 before the world notices. In today's video, we're looking at 5 low-priced stocks that have been making moves behind the scenes. Companies with fresh earnings, new partnerships, and real growth stories that most investors aren't paying attention to. These aren't random penny plays. Each one has something unique happening right now that could shape its future value. The exciting part, all of them are still trading under $10, making them accessible to almost any investor. Stick with me until the end, because the number one stock might surprise you the most. And before we dive in, let's set a challenge. If this video reaches 500 likes, I'll bring you another list of under-the-radar stocks that Wall Street is quietly loading up on. So hit that like button and let's jump straight into stock number 5. Stock number 5, Phunware, trading around $5.73, is a mobile engagement and enterprise cloud platform company that builds integrated software solutions for mobile applications, data, and monetization. The company focuses on creating multi-screen as a service solutions for enterprises, providing mobile wayfinding, indoor positioning, advertising, and loyalty engagement tools. One of Phunware's most talked about ventures is its move into blockchain with the Phuncoin and Phuntoken ecosystems, aiming to decentralize data exchange while rewarding users for their engagement. In terms of financials, the company reported revenue growth in its recent quarters, with strong emphasis on recurring software sales, though it continues to work toward achieving profitability. In its last quarterly report, Phunware highlighted expanding partnerships with healthcare facilities and smart city projects, where its technology enhances user navigation and mobile engagement. The firm has also made headlines with collaborations in political campaigns, leveraging its data and mobile targeting capabilities. Despite its small cap volatility, investors are closely watching Phunware because of its dual positioning in mobile, engagement, and blockchain-powered digital ecosystems, which gives it exposure to 2 rapidly expanding markets. Stock number 4, Bumble, BMBL. Bumble, currently priced near $802, is one of the world's leading online dating platforms, famous for its women-first approach to connecting people. Beyond its flagship Bumble app, the company also owns Badoo, a global dating app with millions of active users, giving it a strong international footprint. Bumble has been increasingly investing in artificial intelligence for matchmaking and content moderation, ensuring safer and smarter user experiences. Financially, the company's most recent earnings report showed revenue growth driven by strong user monetization, with paying users rising steadily. Bumble's management continues to emphasize international expansion, particularly in Latin America and Asia, where it sees large growth potential. Recently, the company announced new AI-driven features that enhance personalization, a move that could help it compete better with rivals like Tinder and Hinge. On the financial side, Bumble is still navigating profitability challenges, but its strong subscription base and advertising potential offer a path to sustainable growth. The stock's undervaluation under $10 makes it an intriguing play for investors who believe in the long-term dominance of digital dating and Bumble's unique brand positioning. Stock number 3, VTEX. VTEX, trading near $5.75, is a software-as-a-service company providing e-commerce platforms to businesses across Latin America and beyond. Its cloud-based solution enables retailers and brands to create, manage, and scale online stores with integrated features like marketplace management, logistics, and omni-channel support. VTEX has grown into a leading player in Latin America's e-commerce revolution, with big clients including Walmart and Coca-Cola leveraging its platform. In the company's most recent quarter, revenue increased by double digits year over year, highlighting strong demand for its scalable technology. While still reporting net losses, VTEX has shown improving margins and a path toward profitability, which has drawn positive analyst sentiment. Recent news includes expanding operations in Europe and strategic collaborations with large retailers in Brazil, giving it a more global presence. With online shopping continuing to surge in emerging markets, VTEX is well positioned to ride the wave, and its stock trading under $10 makes it a potential high-growth opportunity for long-term investors. Stock number 2, ADT, with a stock price around $8.45, is a household name in security solutions, offering residential, commercial, and smart home services across the United States. The company's core business revolves around subscription-based monitoring services. Providing stable recurring revenue, ADT has been transitioning into a smart home and automation leader with products integrated with Google Nest through its strategic partnership with Google, which has brought in both capital and technological innovation. In its latest quarterly earnings, ADT reported steady revenue growth with improved profitability, supported by reduced debt loads and stronger cash flows. The collaboration with Google has resulted in advanced smart cameras, video doorbells, and AI-driven monitoring tools, positioning ADT at the intersection of home security and connected technology. Recently, ADT also expanded its solar division, aligning itself with sustainable energy solutions for households. The company's stock remains attractive under $10 given its strong brand recognition, recurring income streams, and partnerships, with tech giants making it a solid pick for investors seeking both stability and growth. Stock number 1, Banco Santander, ESIN. Banco Santander, trading near $8.67, is one of the world's largest banks with significant operations in Europe, North America, and Latin America. Headquartered in Spain, Santander provides retail banking, commercial banking, wealth management, and digital services to millions of customers globally. The bank is well known for its dividend policy, which appeals to income-seeking investors, and its diverse geographic footprint helps mitigate risks tied to any single economy. In its most recent quarterly earnings, Santander reported strong net income growth, supported by higher interest rates and strong performance in Latin America, particularly Brazil and Mexico. The bank has also been investing heavily in digital transformation, with mobile and online transactions now making up a majority of customer interactions. Recent developments include partnerships with fintech firms and expansion of its digital-only bank, Openbank, which is growing rapidly across Europe. With a healthy balance sheet, resilient profitability, and commitment to shareholder returns, Banco Santander stands out as a reliable, under $10 stock that provides both global exposure and consistent dividend opportunities. Amazon at $3, Tesla under $10, Nvidia before its 50,000% climb. All of them looked like just another cheap stock before history proved otherwise. The 5 companies we just covered are still trading under $10, but each has momentum, partnerships, and growth stories that could set them up for something much bigger. Of course, not every stock turns into the next giant, but the upside on just one winner can change your portfolio forever. If you found value in this breakdown, hit that like button and subscribe so you never miss these under-the-radar opportunities.